Good morning, everybody. Welcome to Option Pit. This morning volatility report with Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. Educator du jour. Why is VIX rising as movement falls? An interesting blog by Mark, and the really simple answer is, like we discussed yesterday, nothing's really changed. We do have a little volatility. Market's down 0.5%. Again, 10-day volatility is now below the 9 handle, and realized vol is dropping, but none of that has anything to do with reality because we're all waiting for the Fed just to stop dithering around and get on with whatever they need to do. Okay? That is it. There's the market, there's no fundamentals, there's no earnings, there's no nothing. It's all the Fed. Okay? We rallied close to all-time highs. And at this point, you don't have 9% realized vol and you have VIX trading 17. Okay? This is all sheer worry on the Fed. How far volatility goes up, I have no idea. How far the market goes down, I have no idea. But right now, we kind of touched our high water mark, and everything else is sliding. Okay, the vol products are catching a little bid. The futures are catching a little bid. Right, the November future is now about flat with VIX as we move into expiration. Next Wednesday, stop trading Friday. The December future is only 50 and 53 cents in contango. So again, the curve is flattening up, mostly because again the futures are built to absorb rises in VIX, and that's what's happening right now. Okay, so. But we're not getting a lot of movement intraday. So again, iron condors and iron butterflies, things like that. Because until we really get an announcement, we're really not going to move. So everything now is just kind of sliding down. Maybe it has those little tepid rallies. But the reason is you've got stocks, at pretty good levels, and we need a reason to be there. And right now we don't have that reason. We don't have a reason to go higher, but we certainly have reasons to sell off. We've got plenty of worry and things like that. And that's what we've got. So I think if you want to trade the indexes, you want to sell some volatility. Keep it shorter term. Time spreads still looks like they're going to do very well, because if you look at the term structure, the DC volatility keeps going up. You can almost sell this NOV 20 now for close to what you can buy this back month December for. Doesn't sound like a bad do. So we'll be looking for time spreads and things like that in Option Pit today. All right. And I think that's what we've got. All right, everybody. Have a good day. And we will see you all in Option Pit Live shortly. Bye-bye. Oh, I almost forgot. Look for our webinar coming on fixing broken positions in early December.